I need you to stop what you're doing right now. Put down the coffee, close the other tabs, and look at the screen. Look at the price ticker on your phone. What does it say? It likely says something around $71. Welcome back to Veiled Wealth. If you're looking at the COMEX spot price, or the London Fix, or any of the major Western feeds, you are seeing a number that hovers right there in the low 70s. And if you are a technical analyst, you are probably drawing lines on a chart, looking at support levels, and telling yourself that the market is consolidating. You're telling yourself that silver is holding the line. But here at Veiled Wealth, we are here to tell you that the number on your screen is a lie. It is not just a little bit off. It is not just a lagging indicator. It is a hallucination. It is a go signal from a dead system that hasn't realized it has stopped beating yet. Because right now, as I speak to you on the other side of the world, in the physical streets of Tokyo, the reality is violently different. We are receiving confirmed, verified reports from Veiled Wealth sources on the ground in Japan that retail silver bars, the actual physical metal you can hold in your hand, the metal that protects you from currency collapse, are changing hands for 20,000 yen per ounce. Let's do the currency conversion together. At the current exchange rate, that translates to roughly $130 per ounce. I want you to let that sink in. $130. Now look back at your screen. $71. That is a spread of $59. That is a premium of 83%. In the history of modern financial markets, we have never seen a divergence this extreme between the spot price, which is supposed to represent the global value of the commodity, and the street price, which represents what people are actually willing to pay for it. An 83% spread is not a market inefficiency. It is a market failure. It is the financial equivalent of a heart attack. When you see a spread of 2%, that is normal. That is the dealer's profit margin. And when you see a spread of 5%, that is high demand. When you see a spread of 10%, that is a supply squeeze. But when you see a spread of 80%, that is a complete systemic fracture. It means the mechanism that connects the paper market to the physical market has snapped. The cable has been cut, the elevator is falling, and the floor is rushing up to meet us. Now, I know what the skeptics are going to say. We see the comments on the Veiled Wealth channel all the time. You are exaggerating. Japan has high taxes. It costs money to fabricate the bars. It costs money to ship the metal. And to those people, I say you're missing the point entirely. Yes, there is friction. Yes, there is VAT. But friction does not cost $59 an ounce. It does not cost $59 to stamp a piece of silver. It does not cost $59 to ship a piece of silver across the Pacific Ocean. Even if you add up every single tax, every single insurance fee, and every single minting cost, you might get to $10. Where is the other $49 coming from? It is coming from panic. It is coming from scarcity. It is coming from the fact that the Japanese yen is imploding. And the Japanese people, who are historically some of the biggest savers in the world, are rushing for the exits. They are dumping their currency and moving into hard assets at any price. They do not care that the COMEX says 71 miles. They know that if they try to buy at 71 horse, there is no metal available. This divergence is the definitive proof that the arbitrage is dead. And this is a core concept we teach here at Veiled Wealth. In a healthy market, the banks act as the equalizers. If silver is $71 in New York and $130 in Tokyo, a bank like JP Morgan should be buying every ounce in New York and selling it in Tokyo for a risk-free profit. They should be making $30 million a day doing this. So why aren't they? Why is the gap sitting there wide open? Because they can't. The plumbing is clogged. The logistical chain that connects the massive industrial bars in New York to the retail market in Asia is broken. There isn't enough refining capacity to melt down the big bars fast enough. There aren't enough secure transport flights. And most importantly, the supply in New York is not as liquid as they pretend it is. If a bank tried to withdraw 10 million ounces from the COMEX today to ship to Japan, they would trigger a default. The exchange would stop them. This brings us to the most dangerous myth circulating right now, one that we need to debunk immediately on Veiled Wealth, the myth that the banks are bankrupt. It is very easy to look at this spread and scream the banks are dead. JP Morgan is short silver at $71, but the price is $130. They are insolvent. I'm here to tell you that it is not that simple. Yes, the banks are hurting. Yes, they are bleeding. But if you think a bank with $1.5 trillion in Tier 1 capital is going to collapse because of a few $billion in silver losses, you are underestimating your enemy. Let's look at the math. The commercial banks are short roughly 200 million ounces on the COMEX. If silver goes to $100, they lose about $6 billion, and that sounds like a lot to you and me. But for JP Morgan, which sits on a $300 billion safety net, $6 billion is a rounding error. It is a bad quarter. It is a cut in bonuses. It is not a death sentence. Furthermore, banks are not gamblers. They are bookies. While they are short on the COMEX, they are likely long on physical contracts with miners. They are hedged. Why does this matter to you? Because if you believe the banks are going to die tomorrow, you will make reckless bets. You will buy call options that expire next week. And the banks, who have deep pockets, will just hike the margins, crash the paper price for a few days, and wipe you out. Here at Veiled Wealth, we warn you, do not underestimate their staying power. They are facing a liquidity crisis, not a solvency crisis. They have the money, they just don't have the metal. And that is where the real story begins. The metal, or rather, the lack of it. While the banks play games with paper money, the physical supply chain has been severed. We have covered this extensively on Veiled Wealth, but we need to look at the new reality of January 1st, 2026. As of this morning, the new Chinese export regulations are active law. The media calls it licensing. We call it a soft ban. Under these rules, the hundreds of small refiners who used to supply the world are cut off. Only the massive state-owned refiners can export, and their mandate has changed. Their job is no longer to make profit. Their job is to secure silver for China's solar industry and military. China is running a 2,500-ton annual deficit in silver. They need every ounce they mine and every ounce they can import. They are not going to export metal to save the Western markets. This means the China price and the Western price are going to decouple permanently. Western companies, Tesla, Samsung, medical device manufacturers, are waking up to a dial tone. They cannot get the metal they need from Shanghai. They are forced to fight over their remaining scraps in Mexico and Peru. This is what drives the premiums up. This is why you see $130 silver in Japan. It is not just speculation, it is industrial panic hoarding. Companies are buying a just in case because they know the supply line is broken. So, where does that leave the COMEX, the vault that is supposed to back the global price? Let's look at the data, analyzed by our team here at Veiled Wealth. The registered inventory, the metal actually available for delivery, has fallen to 38 million ounces. The world consumes 3 million ounces a day. Do the math. The global exchange is sitting on 12 days of supply, 12 days. If the mines stop or the ships stop, the COMEX is dry in less than 2 weeks. This is not a reserve, this is thin ice, and every time the banks smash the paper price down to $71, they are making it cheaper for industrial buyers to loot the vault. They are draining their own lifeblood. So, what is the strategy? How do you profit from this without getting burned by the volatility? This is the Veiled Wealth battle plan. First, ignore the Japan headlines. Do not go out and pay $130 for an ounce of silver. That is panic buying. That is paying an 80% premium. You're handing your profit to the dealer. Instead, you need to arbitrage the fraud. Think about it. The banks are spending billions to keep the paper price artificially low at 71. They are doing it to save themselves. But you can use it to your advantage. Because the spot price is suppressed, you can buy physical silver from your local dealer for maybe $79 or $80. You are buying the exact same metal that is trading for $130 in Tokyo, but you're getting it at a massive discount because of the bank's manipulation. You are stealing value from a broken system. But, and this is the most critical warning from Veiled Wealth, you must buy physical. Do not buy SLV. Do not buy unallocated accounts. Do not trust a bank to store it for you. If you have an unallocated account, you do not own silver. You own a generic claim against a bank that is short silver. When the COMEX runs dry, they will not give you metal. They will settle your account in cash at $71. Meanwhile, the real metal will be $150. You will be left with paper money while the wealth leaves the building. If you don't hold it, you don't own it. The roadmap for the next 12 months is going to be brutal. It will be a war of attrition. The banks will use volatility to try and shake you out. They will flash crash the price. They will raise margins. They want you to get bored. They want you to sell your silver and buy Bitcoin or Nvidia. Don't fall for it. The structural deficit is real. The China wall is real. The inventory drain is real. We are watching the end of a 40-year suppression cycle. These cycles end with violence and confusion. But the destination is locked. The price has to go higher to destroy demand. $71 doesn't destroy demand. $150 might. So stay calm, buy the physical dips, ignore the paper noise, and keep your eyes on the registered inventory. That is the countdown clock. This is the insight you only get here on Veiled Wealth. We don't tell you what to buy, we tell you what they are hiding. And right now, they are hiding the fact that the silver market is broken beyond repair. Stay informed, stay skeptical, and above all, stay prepared. This is Veiled Wealth, signing off.